All right, we're back in our masterclass. This is part two of our long term investing class, right? This is part two. So I'm excited about this. I'm excited to be able to be here with you all to be able to give you this information. Now, as we get ready for this is something that I want us to hang our hats on and open up our minds to as we get ready to dive into this. As a long term investor, right? A long term investor, there are certain ways and certain things you should gear your mind towards when you're looking to enter into this space. And when you enter into this space, being a part of these masterclass trainings, this is what's going to give you in a free way, right? This is not paid at all, period. So you absolutely is getting this for free. This is going to help you understand how to invest long term. This is completely different from day trading. This is completely different from swing trading. This is me wanting you to take a approach to understanding these are long-term holds. So if you were to buy something, you're holding it for the long term. That means it could be 5 years from now, 10 years from now. Long term, okay? That's the difference of what we have to understand and that most people have a problem with understanding when it comes to trading. Most people struggle in that area. But I don't want you to be a person who struggles within any area as it pertains to investing because you have the opportunity to be led by someone who knows and understands exactly what they're doing. And to me, that is a blessing. Anytime I could be led by somebody who knows exactly what they're doing, it just makes it easier for me, right? It makes it easier for me. So let's go ahead and do our homework. Those of you who were in our last masterclass training, you did have a little bit of homework to do, right? There were some things that were asked of you within that. We went over our syllabus and what we're going to be going over as far as it pertains to long term. But today, what we're going to focus on is strategies. We're going to focus on strategies. So there's three strategies that we're going to be focusing on here. And you're saying, well, Jeremy, why are we focused on these strategies and nothing else? Well, with these strategies, the reason for this is for a few reasons. Okay. The first reason is for you to be able to understand and understand the importance of the choice and the decision it is you're making to invest. Now you're understanding that this is my reason for why I'm choosing to invest. This is what I'm looking to be able to build out. Once you have that within your mind and you have an understanding of this fully, it makes it a lot easier for you as you're going through the process. Most people are not willing to hold on through the process. The minute that they see a green day, they're pulling capital. The minute that they see a red day, they're pulling capital, exiting out of positions. And you never allow the position to grow within itself, right? So we're going to look at three strategies. Let's take a look at our first three strategies of what it is of what we have here. Our first strategy, and these are common strategies here. This is nothing that I made to reinvent the wheel or whichever the case may be. These are strategies that people have been doing for quite some time, long term wise. Okay. The first one of what we have is index investing. Index investing. Rather than picking individual stocks, you invest into a mutual fund or ETF that tracks a broad market index like the S&P 500. This allows you to own the market at a very low cost. Number two, we have the three funded portfolio. The three funded portfolio is a straightforward strategy popular among long term investors. It typically allocates capital across a U.S. stock total market index, an international stock market index, and a total bond market index to achieve diversification and stability. And you have number three, dividend reinvestment plans, which we call DRIP. It automatically reinvesting your dividend payouts to buy more shares, significantly accelerating the power of compound interest over decades. And that's one of my favorite strategies is the drip strategy. And so let's start with number one, index investing. Rather than picking individual stocks, you invest into a mutual fund or ETF. What are some of the ETFs that we have, right? When we talk about extreme traded funds, what are some of those ETFs that are out there, right? That are really good, solid ETFs. So, what I'm going to do is I'm going to open up my list. And you all know I have a beautiful list on my watch list, right? Of ETFs. So, the first one of what I want to use as an example, right? This is just an example, is let's look at healthcare ETFs. Okay. We're going to take a look at healthcare ETFs. So what I'm going to do is reset the chart here. And we're going to go over the first healthcare ETF. Direct Saran Daily Healthcare Bull 3X ETF. That means every move is on a 3X leverage within this ETF. I would highly advise you to be careful with trying to trade a ETF that is on a 3X leverage if you don't have an idea as to what you're doing. But we're looking at this, and what we're going to do is move out to the weekly. And we would just want to see if we could get a good idea as to how this ETF has been trading over time. We just want to get a good idea. We're going to mark out the high. Let's mark out the high right here. And we want to mark out our lowest point within the last swing. Within the last swing, our lowest point. Our lowest point within the last swing has been, it's been as cheap as $16. It has gone quite expensive since 2016. So overall, looking at this since 2016, right? How would you assess this ETF? You can even go all the way back, and what we could do is let's make a clone copy here to 2011, 2012. We could go all the way back during this time frame. And what we see is a trend that is very strong and it is moving up. You have a higher low. And here you have a higher high. And you have a higher low. Followed by a higher high. If you want to, You can consider that a higher low right here. So we see within this is creating higher highs, higher high, higher low, higher high, higher low, higher high, higher low. So you have higher highs and higher lows that has been growing within this ETF. Would this be an ETF I would look to invest into? Absolutely, because it's creating higher highs and higher lows. Okay. Now, we're not talking about entry points or where we would enter into position here, but what we are mainly focused on is things that creates higher highs and higher lows that are considered good long-term investments. Let's move to the next one. IYH. That is iShares US Healthcare ETF. And what do you see? Higher highs. Here's a low, right? And we're just going to clone ourselves a couple of these. Look at that. And as you can see, what do you think is coming? Maybe another higher low, possibly. Just throwing that out there. But as you can see this, even if you go all the way back to 2001, right? If you were to go back to 2001, you see a low here, a high here, followed by a lower low, followed by a lower low, and then you have a high here, a low here, high here, low here, high here, low here, high here. You see the uptrend. So if I'm a person who was thinking about healthcare ETFs, the proof is in the pudding as far as it's on a trending path, right? What about Invesco Dorsey Wright Healthcare Momentum? This is another ETF. And within this ETF, you see some of the same thing, right? A lot of these ETFs move in correlation with each other, kind of like how when you have Bitcoin. These are our healthcare providers. Our healthcare providers have been, hey, same as that thing. There's a low, lower low, higher low, higher low, higher low. And you can see this happening. That is a uptrend, and we like that. Here's another company, H Tech, Robo Global Healthcare Technology. Now, when you look at this, you have a high here, you have a low here. I don't know why I make this low that big. You have a low here, and see if we can get a couple of these. You have that low, and you have that high, right? And with these, you can go lower low, higher low. All right, so Do we have an uptrend on H Tech, Robo Global Healthcare Technology and Innovation? We have somewhat of a trend if you go back to where this swing low is, which is here. You go from the swing low to this high, with our first initial TP being at 47.60, full TP would be at 56.22. That is if we were trading as long term, right? So we're not trading as long term. And when you look at this trend from this standpoint. If I was to come here and go like this, it's still on a level of what? Support. Support. This could rally up. It done broke already. That's high. It could come right back down and retest to do what? Continue up, down, up, down. That's H Tech. Someone said, what about SpaceX? Well, if you're thinking about SpaceX, then there are alternatives to SpaceX. Instead of getting SpaceX, you should be looking at first RONB, ticker symbol RONB. It's a fairly new ETF, but I like it. Jeremy, why do you like it? Because it holds pretty much 14% of this company here. Ticker symbol TSLA, which is Tesla. So if 14% of what they hold is within Tesla, and we see Tesla pretty much, we're looking at this on the weekly, right? It breaks support here. What was once support has become resistance. But check this out. You lose support here. You come rally back up only to find resistance here at this channel, this parallel channel that we created. You got resistance here. And so you start consolidating and starting to try to trend up to the upside. That's something you want to keep your eyes on and pay close attention to if you are a trader. But that's still not telling me why I should be looking at first Baron or Baron first, right? So with Baron first, we're going to pay attention to a couple of things here. When you are looking to long term invest, you want to have companies that are proven over time. You don't want to just fall in love with a company just because you like their tennis shoes. But if you are a person who loves the small things that matter, being outside, enjoying your companion, your significant other, your spouse, things are just going to be different. Now, when it comes to investing, you want to invest like how you would invest with your friends. How many of you would invest with any of their friends right now? I'm pretty sure not a lot of hands will be raised. Not a lot of hands will be raised. Reason for that is because you don't fully trust your friend enough to be able to invest within them from a long-term standpoint. You know how many people said that they have friends, but they friends never stand up for them? When you invest, you're investing because you want this stock to be within your favor. And when something is in your favor, you treat it with class, dignity, respect. It's like you're almost nourishing it, right? Most people don't choose to nourish relationships. So it trickles down into their thought process when it comes to things of what they should be doing, like investing. If you're a person who think of investing as something that costs a lot of money, you're going to struggle. And you're going to struggle bad because you're going to miss the whole entire wave because your focus and your energy is on something that has nothing to do with what we're doing right now within that time frame. So we have some ideas of ETFs. We got RONB, and we looked at a few healthcare ETFs, right? So as we looked at these healthcare ETFs, what do we have that's next? The three funded portfolio. The three funded portfolio is a straightforward strategy popular among long-term investors. It typically allocates capital across the US stock market index and the international stock market index and a total bond market index to achieve diversification and stability. What would be a company, or not just a company, what would be an asset within the international sector? Can anybody give me that? Can anybody give me what would be the asset of what is going on with something that is outside of the US sector? Here's a company, here's an example of that. I could give you Alibaba. Alibaba Group Holding Limited. And as you can see, it's currently falling into a place of where it could be possibly entering into a discount zone once it comes down here and start trying to draw liquidity from down here. Right now, it's having a little bit of a relief rally right now. But if price were to continue to drop and fall, this is where it would be. So here's what I'm taking a look at. If you invested into Alibaba back in COVID and you never took profits, and we're going to say back in COVID during this time frame here, this is 2020. If you invested into Alibaba back in 2020, check this out. You are down in this portfolio. You're already down 78%. To me, that is a complete failure. So, Jeremy, when do we catch opportunities? Look, this is how you catch those opportunities when they're like that and it's trending down like that. Obviously, you know Alibaba is trending down like this based upon news over time. So as it propels itself and climb back up to the upside, it just makes it more clearer to be able to see the break and retest of this support line. You ever heard of break and retest? Look at the level of support. This straight line here, you break out of that and you come back and find support here. You found support again. Don't find support for some. Don't look for support on something that is like totally resisting that area. Jeremy, what is an example of that? Well, if we were to go here and we take a look at silver, silver is what? A break. Trying to retest. If I can move this or make this a little bit bigger, look at where we are right now with silver. Support, support. They're breaking down. This is the same way of how you should be looking at your long term investments. So if you're people like my Bitcoin users, Bitcoin, for my Bitcoin users, same exact thing. And we're looking at this on the weekly. We have our high point, our low point, and our midpoint. What will we do based upon our common strategy of the three funded portfolio? We want something, right, that is in the US total stock market. And you can use this as two ways of doing this. You can use and utilize crypto. You can use and utilize regular stocks. You can use or utilize international stock. So if we focus on our international wave pattern of this, what is it that we're going to gain from this? Our international wave pattern, when we look at something like Alibaba or we look at other companies that's outside of the US that is trading on different sectors, you got to be able to understand what those sectors are, how they move, because if you're allocating capital that's over there, you want to be a little bit more focused on what is happening because all you see is NYSE here. So for me, instead of having to want to put my full focus within that, I would go to something that I know is world global based, but it's even though it's controlled by more so per se the United States, but it's a global asset. So with Bitcoin being a global asset, that will be something of what I would use in this type of portfolio. And I will follow it up, right? In order for me to remain diversified, let's open up my list here and let's go down to what? They say bonds, right? But I'm telling you, based on how bonds are moving and things of that sort, we don't want bonds. We want to go to REITs. And if we go to REITs, I want to look at companies like Realty Income Corporation. I mean, let's look at them on a weekly. What are we seeing? What are we seeing? Companies like this. Let's just see if they are within their last swing, if they're on a uptrend or a downtrend based upon their last swing. Okay. And when you look at it, they are. And it keeps you diverse. Look at the movement. It's a slow chop, but it's trending and it's trending to the upside. Your next level is 79.24. You're at 63.22. So if I'm a person who is looking for these, I'm looking for these based upon drawing myself out, right, towards the weekly, and I'm trying to be diversified between those three funded portfolios. We're switching it up and not going total bond market index or international stock market index. We're switching it up and we're using what? We're replacing them with a crypto asset that is global. And also, we're using a real estate investment trust, something that holds value. It's whole value. All right. So let's go back. Here's other companies: AGNC, Vanguard, Equity Residential, Invitation Homes. These are companies that will keep you, how would I say? These are companies that will keep you, I don't want to say grounded. I would want to say more so of these are companies that will keep you diversified. Understanding that strategy. Here's our last strategy: dividend reinvestment plans, DRIP, the DRIP strategy. Now, the DRIP strategy is my favorite strategy. And I say this all the time. Like, hey, if you're looking to be able to make some money and you know what you're doing, you want to find high dividend yields, right? You want to find and locate high dividend yields. Because if you can spot high dividend yields, think about this. If you would have bought this back in 2024, back in COVID 2020, right? Say you loaded up during this time frame here when this thing was as low as $30.95, and you just loaded up. You put $1,000 there. Once you're able to understand what their dividend payout is and if it's quarterly, how would we be able to do that within TradingView? Oh, easy. We could come right here and we could go to events and we're going to click on dividends. And we can see each time they paid out a dividend. Each time. Let's drop to the daily on this. As we drop to the daily, look at this. You have this dividend here that was out given out in March. Here's the next dividend in June. So they're giving you a dividend every 3 months. Their dividend amount is $1.06 per share. If you had 1,000 shares, you're taking that capital and reinvesting it back into the company every 3 months. And so if you're a person who has been doing this since COVID, men lie, women lie, but numbers don't lie. If you're a person who has been compounding since COVID, look at the magnificent trend that you have been on. Let's just take our measuring tool and we're going to go from this low here. Well, we said 2020, right? So let's go all the way back. We'll go out a little bit further. So let's go from COVID. If you were a person who started here, all the way to where we are now, currently. That's 132% gain on your money. Think about the building compounding interest from your high dividend yields if you had 1,000 shares. So if we were to do the math on this, you would have made a significant amount of cash. A significant amount of cash. AT&T. Exxon. Verizon. PFE. AbbVie, which is a healthcare technology. Chevron. PM, which is Philip Morris International. Vanguard, high dividend yield. All of these are up. From 2024 to 2020, all of them are up. But Jeremy, I want to get a really good entry. We'll talk about that. But for today, understanding these three common strategies: index investing, the three funded portfolio, and a dividend reinvestment drip, they all play a part into something that you can control the strategy. You don't need to go and invest into the S&P 500, in my opinion, because of the return, the percentage gain on your money. It's nowhere near if you were to invest into a drip type situation or the three funded portfolio. The thing is, with the three funded portfolio, you'll be much more diversified within this portfolio over a long period of time. You'll be more diversified. And so with today's video, this shows you just a simple way of finding these strategies, seeing these strategies for what they are, and then taking from these strategies what you can do from a long-term standpoint. And find the one that is best suitable for you. The one that I find that's best suitable is what? The drip strategy. Because with the drip strategy, you're taking your investments and you're putting them back into the company, which means your money is now constantly working for you and you're not working for it. Constantly working for you and you're not working for it. That's something that you can't beat, right? When things are working for you and you're not having to work for it, what does that mean? What does that tell you? That tell you that, hey, any money that's sitting still is the money that has no willpower, because it's just being held at this point, right? It's just being held at this point. So I appreciate you all. I'll see you in the next video of our masterclass free investing training video. You've learned three strategies, and I need you to take these strategies and be able to find out which one is best suitable for you. Do you want to go just investing into ETFs, right? I mean, kudos to you if you do that, but you can outbeat just investing into those ETFs because they move at a slower pace, right? If you find the three funded way, what happens? You got your international, but we switched it up. We threw a crypto asset in there, right? And within that crypto asset, we also took a real estate investment trust and threw that in there too as well. Instead of us going for bonds, we went straight for the real estate investment trust, which we call REITs. Our second one was a crypto asset, whether it's Bitcoin or Ethereum. We want to choose either one of those two because they make up at least 60% of the market cap. And then for our third one, what do? Find ourselves a good US ETF or US stock that we may like and utilize that. And then our third strategy is the drip strategy, where we find high dividend yield companies that pay us every quarter or every month with a dividend for holding shares of their company, and we take them and we just reinvest those shares every time they pay us back. So now we're building compound interest and buying more shares, utilizing the money and the value of what we've made over time, and we do that consistently enough, you start creating real extreme wealth for yourself. So you have those three strategies. Find out which one is best suitable for you, and I'll see you in the next video.